Catching the trend is the fastest path to 1K days, but most traders miss it because they overthink every move, or worse, trade against it. They try to trade what they think will happen, and that will always be a losing game, because the market is built to fake you out and trap you. Trying to short at resistance, but it rips right past you, or trying to buy the dip, but it just keeps dipping. This is how we get burnt over and over, and never make any lasting profit. But what most traders ignore is this. Trading with the trend is a literal gold mine. It's easy to find, very high win rate and high risk reward, which is everything you should be looking for if you actually want to grow and scale your account. The only edge is trading what's actually there. It's trading what you see, not what you think or what you feel. And if you can commit to that, you can build an entire career by just riding trends and taking those dead simple setups over and over. That's exactly what the cloud bounce lets you do. It's a clean, mechanical way to catch the trend right before it takes off and nail the meat of that move. So in this video, I'm going to show you exactly how to spot a valid cloud bounce setup and how to repeat it over and over so your account can finally stop chopping sideways and go vertical. Here's what most traders don't understand. Every move in the market, no matter how large or what direction it moves in, happens the exact same way. Price will be at a key level. This will be a price point with a lot of volume and activity. And at this moment, things are balanced between buyers and sellers. Neither side has enough to overpower the other and move the price. Then we will get an influx of buying or selling pressure. In this case, it's buying pressure. So we break out of the high volume level to the upside. Now, since there's more buying volume than selling volume, buyers will keep dominating and pushing the price up. So they will basically run unopposed until the other side can come in and stop them. And that selling pressure will only come in at the next high volume level, where they have enough liquidity to stop the buying pressure. Then at this point, the market is in balance again. Selling pressure goes up and buying pressure goes down, so we're at an equilibrium. Then the process restarts, and then one side will eventually get more aggressive and make the next move to the nearest high volume level, whether that's up or down. And this is exactly how the market moves. It will move from one high volume level to the other, depending on whether sellers or buyers exert more pressure at each of those levels. This is how the market literally has to move. It's constantly seeking liquidity from buyers and sellers because it needs a large volume of buyers and sellers to move around. And that can only be found at high volume levels where there's lots of institutional volume already. Now this is going to be key for catching the trend, because all we need to do now is decide whether buyers win or sellers win at a specific level, and then take the trade in that direction to the next high volume level. If you want to know how to find these levels, I go more into depth in other videos on exactly how to do that. I'll link them right now. So now we just need to decide whether we'll move to the level above or below first. And to determine this, we don't just want to guess, of course. That's where trading with the trend comes in. The market will have one of two moves. It'll either move with the current trend or against the current trend. Trading against the trend is known as a mean reversion trade, while trading with the trend is known as a breakout trade. Now, the trend is the most powerful force in the market, because our number one enemy in the market is randomness. It's not knowing the outcome of the next trade, or if it's even reliable enough to generate an edge. That's why most trading strategies, even though they seem to work for a little, always end up back at zero. The trades they produce simply don't have a probability of working more often than not, and therefore make it mathematically impossible to profit. But trading with the trend is an edge already. The price is more likely to move in one direction rather than the other, and if we take those trades over and over, we'll have a serious edge. And the way we determine the trend very quickly and easily is by using the 20 and 50 EMA cloud. This is very simple. If the cloud is sloping up, we're in an uptrend. If it's sloping down, we're in a downtrend. And if it's flat or choppy, we're ranging and therefore not in a trend, so neither side has an advantage. So once we know which direction it's trending in, all we need to do is look for a cloud bounce. This is a high probability A+ setup and very profitable when done correctly. You can build an entire career just off this one setup. So the cloud bounce setup itself only has 3 steps. Number 1, as we already discussed, is that the price needs to be at a supply and demand level. Here's the thing, cloud bounces are everywhere. By definition, a cloud bounce is just when the price pulls back near the cloud, then bounces off it in the direction of the trend. But 90% of them are garbage. If you trade every single cloud bounce, you'll go broke. We only want to trade high-quality cloud bounces to get the highest win rates and gains possible. And the only ones that matter are the ones that happen in supply and demand zones, because that's where real volume sits. So on our chart here, we see that the price has recently broken into a supply and demand level. We don't care about what the price is doing in the white spaces, just the fact that we're now at a level, and we can therefore engage. We see that the cloud is sloping up and bullish, so the price will either continue moving in the direction of the cloud or it'll fail, in which case we'll see a bearish cloud flip and a potential reversal. From here we have two choices. We need to determine if price is headed to the upper level or lower level first, and for that we move on to step 2. Once the price is at a level, we zoom out to the higher time frame to confirm that the price is trending. Our execution time frame is the 5-minute, but higher time frames like the 30-minute and the 1 hour will show you who's really in control. This is how you know if you're swimming with the current or if you're swimming against it. And you definitely don't want to be swimming against it. So if I see that the cloud is flat, choppy, or unclear, I'm staying out, because a flat cloud means the market hasn't picked a direction yet. And if it hasn't picked a side, I'm not picking one either. But if the higher time frame EMAs are clearly trending in one direction, that tells me the trend is active. The market has picked a direction, and I want to be moving with it. Now in this case, the market is trending up. Here's the 30-minute cloud, and here's the 1-hour cloud. Notice that both are firmly sloping up and closely following the price. This shows us a healthy uptrend with healthy pacing, and given this information, we now have an edge toward one side. Since market momentum is pushing one way, it means we're more likely to keep moving in that direction. Remember, we're not trading a specific pattern, or trading what we think will happen because that's unreliable. We're trading context, and the higher time frame just gave us the context. Assessing this only takes a couple of seconds. So now the price has entered a level, and we know where to potentially target. Then we just needed to know which direction was more likely so that we could get our edge. And the higher time frame cloud just gave us that. Now we can move on to our third and final step before entering our trade. That's going to be the actual cloud bounce on our execution time frame, the 5-minute. And what we want to see here in a bullish setup would be for the price to dip and consolidate before climbing higher. Essentially, we want the price to catch up with the cloud so that it has enough structure to move up. Because the cloud can be sloping up, but the price can be way too far away and collapse on itself before moving higher. What we want is healthy movement for both the price and the cloud to ensure that it'll keep moving in that direction. We don't want the cloud to be too weak, and we don't want the price to be too strong either. Now, when the trend and momentum line up, it means that probability is heavily stacked to one side. And that's exactly what we're looking for to build an edge. We know that even if we take this particular trade and it doesn't work, as long as we keep taking high probability trades like this with the trend, we'll end up profitable over time. So we're now looking for the price to keep bouncing off the cloud and keep ripping higher. So we can enter long here with our stop under market structure and our target at the next supply level. At this point, your job is done. You just step aside and let the market do the work. Because once that bounce confirms and you're in with structure behind you, the trend does the heavy lifting. That's the beauty of this setup. You're not relying on some gut feeling or some unreliable pattern. You're following a clean process that's mechanical and repeatable. And from here, it's just about letting probabilities play out. If the bounce holds, great. You're riding the continuation. If it fails, cool. You took a structured loss inside a system that works over time. Either way, you're not guessing, you're not chasing, and you're not stuck in some mental tug of war. Your only job is to repeat these 3 steps for every trade. Wait for the price to enter a supply and demand zone. Once it enters a zone, zoom out to the higher time frame and use the cloud to assess the overall trend. Then go back to your execution time frame and confirm that the 5-minute cloud is trending in the same direction as the higher time frame cloud. Do this with discipline, and the results will stack themselves. This is how you stop chopping sideways and finally start generating permanent profit. One clean cloud bounce setup at a time. And this is exactly what I teach traders in my mentorship. You'll work with me directly and we'll help you profit consistently. So if that's something that interests you, click the link below. And if this breakdown helped you think differently about trading, like the video and subscribe to the channel because I'll be dropping more videos like this. See you in the next one.